At S&P Dow Jones Indices, we measure the markets. Hello, I'm Ben Veresh, and this is the Market Measure. Let's start by reviewing how 2024 unfolded in global markets. In the US and worldwide, most equity indices had a strong year. The Dow rose 15%, the S&P 500 25%, while mid and small caps lagged, up 14% and 9%. This chart shows index performances in US dollars, the strengthening of which was a major factor in driving performances in multiple regions. China and Canada were up double digits, 16% and 11%. The main laggards were Europe, where the S&P Europe 350 gained just 3%, and Latin America, which dropped over 20%. Most fixed income indices gained in 2024. However, long bonds struggled, including in the US, where the S&P US Treasury Current 10-year index fell 2%, its third drop in 4 years. Commodities ended higher, with the broad S&P GSCI index up 9%, while gold rose 27%. The S&P 500 hit two milestones in 2024. After reaching 5,000 for the first time in February, it closed above 6,000 on Veterans Day before easing to just below 5,900 by year-end. The US Blue Chip benchmark also marked 57 all-time highs in 2024, shown with orange dots on this chart. This is the fifth most in a year since inception. Historically, all-time highs have not been a good time to sell. As the next chart shows, since 1957, after a new record, the S&P 500 hit another one the next day 55% of the time, within a month 92%, and 99% in a year or less. But sometimes, in some markets, the wait is much longer. Investors in Japanese equities, for example, waited over 35 years for the S&P Japan BMI to hit a new record in local terms. The Japanese benchmark also suffered a 76% drop from its high in 1989 to its low in March 2009. The S&P Japan BMI finally made a new all-time high on July 11th last year. However, after the new record on August 2nd, the Bank of Japan surprised traders with unexpected monetary tightening as the rest of the world, including the US, began easing. The result was chaos in markets worldwide, with Japan at the center. The Japanese yen had wild swings, and so did the S&P Japan BMI, which had its worst one-day loss ever on August 6th, plummeting over 12%. The Bank of Japan reversed course the next day, and the index had its third best day, rising 10%. While US equity markets had less volatility, there was still plenty of big moves up and down. At the industry level, there was a more than 100% difference between the best and worst S&P Composite 1500 industries. Top and bottom, independent power and renewables soared 89%, while personal products dropped 17%. This chart shows the performance of S&P Composite 1500 industries with their rates. The width of segments represents each industry's weight, and they are colored by 2024 performances. Note the wider segments, industries with larger weights tend to be blue, while yellow segments are narrow. In other words, industries with larger weights did better, smaller industries tended to do worse. This trend of larger segments doing better was also seen across our US equity indices. The S&P 500 Top 10 Index, representing the 10 largest constituents of the S&P 500, soared 41%, while S&P 500 Equal Weight was up just 13%, 1% short of the S&P Midcap 400. Small caps lagged even more, with the S&P Small Cap 600 up 9%. There was also an over 100% spread between the best and world's global stock markets in 2024. Kenya came top, up 90%, while Brazil was at the bottom, down 28%. Among developed markets, Israel led with 33%. Asia's two giants, China and India, were closely watched last year. The S&P India BMI soared 26% in the first 3 quarters, and as Chinese equities fell, India's market cap nearly overtook China, which would have made India the largest in the S&P Emerging BMI. After stimulus measures by China in September, fortunes reversed, and their rates in the S&P Emerging BMI diverged again. With such differences in performances, it will be interesting to see how active funds fared last year. The latest stats are from mid-2024, and they show that except for South Africa, most domestic active equity funds underperformed their regional benchmarks over the 5 years. Look out for our full-year SPIVA scorecards coming soon and covering 9 regions to see how active funds did in 2024.